Welcome back to Wealth-Wise Academy. Today, we're delving into the fascinating world of investing, a powerful tool that can help individuals grow their wealth, achieve financial independence, and secure their future. However, navigating the complex realm of investments can be challenging, and there are numerous potential pitfalls that could hinder your path to a comfortable retirement. But fear not. In this video, we'll shed light on some of the most common investing mistakes and show you how to avoid them. Our mission is to empower you with knowledge, enabling you to make informed decisions and maximize your chances of building a profitable portfolio. So let's get started. Mistake 1. Lack of proper research. One of the most significant mistakes that investors frequently encounter is the impulsive rush into investments without conducting proper research and due diligence. In the realm of successful investing, a superficial understanding won't suffice. It is essential to delve deep into the intricacies of where your hard-earned money is being allocated, whether it's in stocks, bonds, real estate, or index funds. Overlooking the fundamentals, failing to analyze historical performance, and ignoring potential risks can prove to be detrimental, leading to misguided investment decisions and substantial financial setbacks. However, by conscientiously dedicating time to meticulous research and staying well informed about prevailing market trends, you can equip yourself with valuable insights and knowledge. Armed with this discerning approach, you enhance your capacity to make educated investment choices that perfectly align with your financial goals, significantly bolstering your prospects for long-term success in the dynamic and ever-changing world of investing. Remember, a well-informed investor is an empowered investor, poised to navigate the complexities of the financial landscape with confidence and wisdom. Mistake 2. Allowing emotions to drive decisions. Emotions wield considerable influence over investment decisions, frequently leading to irrational choices. Fear and greed are familiar culprits that can obscure sound judgment and induce impulsive actions, especially during market downturns or when caught up in hype. To shield yourself from emotional decision-making, adopting a disciplined approach is paramount. Establishing well-defined investment criteria and adhering to a predefined set of rules can provide a solid foundation. Additionally, setting clear investment goals allows you to stay focused on your long-term strategy, mitigating emotional biases that may otherwise sway your decisions. By maintaining a steady course and acknowledging the role of emotions in investing, you position yourself for greater success in achieving your financial objectives. Mistake 3. Lack of diversification. One common and critical mistake that investors often make is failing to embrace diversification in their investment approach. Far too often, they put all their financial resources into a single investment or asset class, which can leave them vulnerable to significant risks if that particular sector or industry underperforms. However, by adopting a well-thought-out strategy of spreading their investments across various sectors and asset classes, investors can effectively shield their hard-earned money from unnecessary losses. Think of a well-diversified portfolio as a robust shield that not only balances risk and reward but also allows them to tap into potential gains from different sectors and asset classes. This approach enhances the overall resilience of their portfolio, making it better equipped to withstand fluctuations in the market. Moreover, diversification opens up new opportunities for growth, ensuring that their investments have the potential to thrive in various market scenarios. So, always remember, don't overlook the paramount importance of diversification. It is an indispensable step towards constructing a solid and sustainable investment foundation for your financial future. At Wealth-Wise Academy, we truly appreciate the value of your time. That's why our dedicated team has meticulously curated this valuable information, so you can access it conveniently without any hassle. By subscribing to our channel, you not only motivate us to produce more insightful content like this but also assist the YouTube algorithm in promoting our video to a broader audience. Your support plays a crucial role in helping us spread financial wisdom and knowledge to more people. So, hit that subscribe button and be a part of our growing community focused on achieving financial success and empowerment. Thank you for being with us on this journey. Mistake 4. Attempting to time the market. Engaging in market timing can be a perilous endeavor, even for seasoned professionals who grapple with the complexities of predicting short-term market movements. The concept revolves around attempting to buy assets at their lowest price and sell them at their highest, based on fleeting market fluctuations. However, consistently and accurately forecasting these changes is an arduous task, bordering on the impossible. Instead of succumbing to the allure of market timing, it is wiser to adopt a more pragmatic approach focused on long-term investing. Aligning your investment strategy with your specific financial goals and risk tolerance allows you to harness the benefits of compounding over time. By staying patient and disciplined, you can navigate the intricacies of the market with confidence and increase your chances of achieving sustainable financial growth. Mistake 5. Trying to beat the market. One of the most prevalent pitfalls in the world of investing is the temptation to beat the market. It's an enticing prospect to outperform the market and achieve above-average returns, but it's essential to recognize the challenges even experienced professionals encounter in consistently surpassing market performance over the long haul. This pursuit of beating the market can lead to poor investment decisions fueled by speculative or short-term thinking, as investors may be lured into chasing the latest trends or hot stocks. Instead, a more prudent and realistic approach is to adhere to a reliable investing strategy that aligns harmoniously with your long-term financial goals. By avoiding the allure of trying to consistently outperform the market and focusing on a disciplined, well-structured investment approach, you increase your chances of navigating the complexities of the market with resilience and confidence, leading to potential long-term financial growth and success. Remember, investing is not a get-rich-quick scheme, and expecting immediate or consistent high returns may lead to disappointment and hasty decision-making. Embracing a patient mindset allows you to stay focused on your long-term objectives and withstand market fluctuations with greater steadiness and composure. Mistake 6. Relying on hot tips and following the herd. One of the perilous investing mistakes to steer clear of is putting too much faith in hot tips from friends or family or simply following the crowd. It's essential to recognize that by the time these tips reach the general public, the potential for significant gains may have already evaporated. Blindly going along with the herd can lead to speculative bubbles, where asset prices become inflated beyond their intrinsic value. Instead, it is crucial to adopt a more prudent approach, conducting thorough research, and delving into the underlying fundamentals of any investment. Making well-informed decisions based on your specific financial goals and risk tolerance is the way to steer clear of this common trap. By seeking advice from trusted financial experts and staying independent in your analysis, you can avoid being swept up in the hype and ensure your investment choices align with your long-term aspirations. Remember, investing should be about a strategic, well-informed path to growth, not a rush to follow fleeting trends. Stay steady and informed on your investment journey, and you'll be on your way to building a successful portfolio. It's crucial to bear in mind that investing is an ongoing journey of learning and growth. Maintaining a constant state of being well-informed, adaptable, and committed to a well-thought-out investment strategy is vital for achieving success in the ever-changing landscape of finance. As you steer clear of these common investing mistakes and continue honing your investment skills, you lay the foundation for enduring financial prosperity. We sincerely appreciate you tuning into this video, and our hope is that it empowers you to make informed and astute investment decisions. If you found the insights shared here valuable, we kindly ask you to show your support by liking this video and subscribing to our channel. By doing so, you become part of our ever-growing community focused on finance, budgeting, and wealth building. Until our next video, stay well informed and invest wisely for a brighter financial future.